Okay, I believe we're live. I believe we've got everybody here who's going to be here. Well, there might be some people that join us partway into the presentation, but for those of you that are here, welcome. Welcome to Safe Option Strategies presentation of Never Lose Money Again, how to safely make money in the stock market without the risk of losing money. I'm going to give you a super brief introduction. My name is Jeffrey Dunyan. I am the owner and founder of Safe Option Strategies. I started Safe Option Strategies over 13 years ago. In fact, I think it's getting close to 14 years ago now. And I started Safe Option Strategies with a couple of purposes in mind. Number one, I knew how frustrating investment education was. I knew it from my own personal experience. I knew it from having gone through nearly $35,000 worth of education and not feeling like there had been any kind of a substantial payoff for that, or at least not a proportional payoff for that. And I had the goal that I wanted to make investment education a much, much more affordable thing for people. I also have this sincere desire to teach people what has been working so well for me. Everything I'm going to show you in the next 45 minutes to an hour is stuff that I am doing. It is stuff that I have been doing. It is stuff that I have been teaching for the entirety of this almost 14 years. I've actually been teaching it for closer to 16, 17 years. Through my own company, Safe Option Strategies, I've been teaching it now for getting close to 14 years. As I go through this presentation, I want to set the stage for a couple of things. Now, I redo a live presentation every couple of weeks. I'm actually doing a live one for the second time in the same week, and I had a very specific reason for doing it. If you've been paying attention, and I'm sure you have, we had kind of an ugly little sell-off at the end of this last week, and I had done a brand new presentation on Tuesday of this past week, or actually Monday of this past week, only to see a couple of days of upward movement in the markets and then kind of an ugly sell-off for the last few days. And I thought it was important that I talk to people about how necessary it is to not overreact, and more important than that, to be prepared so that you don't have to overreact when the markets do what they did at the end of this week. And what happened at the end of this past week might be a precursor to something much bigger. We don't know. And not knowing is the scariest thing about trading in the stock markets. The more you know about what's going on, the better equipped you are to deal with it, and the better chance you have of successfully navigating it. And I want to focus in and show you a couple of things in this presentation that are going to make a difference in the way you trade. They're going to help you in the way you trade. At the risk of being what's the word I'm looking for? At the risk of scaring you away, let me tell you what I'm going to go over. And then I'm gonna be kind of brutally honest with you. If you've seen one of my presentations before, if you've seen this intro presentation before, what I show you today might not be a lot different than what you've seen in the past. It's the same basic concepts. I use this as a way to introduce our product and introduce our services to people. But even at the risk of scaring you away, I'm gonna be really brutally honest with you, because I respect your time. I respect you enough to not waste your time. I'm going to lay it all out on the line right here, and then I'll go through these bullet points about what we're going to cover. You can see we've got up here how to trade with little or zero risk. That's one of the main things we're going to cover, and that's the main thing we do at Safe Option Strategies. But before I go through the other bullet points on this page, let me just put all my cards on the table. This class is not intended to teach you everything that I'm going to introduce you to. However, I hope that if you listen to the entirety of this presentation, you will pick up on some things that will be helpful to you. If what we do as a company, if the education we provide, the packages that you can purchase, if they have no interest to you whatever, and I hope that's not the case, but if they have no interest to you whatever, I want you to be able to get to the end of this presentation and say, you know what, I can at least respect the fact that this guy taught me something. He taught me something that I am going to be able to use and benefit from going forward. Now, with that said, I hope that what I show you in the next 45 minutes or so is enough to pique your interest and enough to get you to take a closer look at our education program that we sell. I know purchasing investment education is not an easy thing. I told you just a couple of minutes ago, I went through a $35,000 program. Could not believe the amount of money that was spent on that program. And I learned some things, but not to justify that kind of money. My program doesn't come anywhere near that kind of cost. It's a fraction of that cost. But even with that being the case, I know it is oftentimes very difficult to pay money for this type of thing, especially when you've paid money for other people's programs in the past and they haven't produced the results that you've expected. If you will stay to the end of this presentation, let me show you what we do. Let me give you a preview into what we do and how we do it. And if you'll stay till the very end of this presentation, whether you're on with me live right now, or I know probably 75 or 80% of the people that see this, they actually see a recording of it. But if you'll stay on till the very end, I'm going to tell you a couple of things that make us incredibly different, and I'm going to take the fear out of making a purchase of this program, and I'm going to offer you a pretty unbelievable deal on the price of the program, so that you can see and experience the sincerity of what I'm trying to do, which is teach people how to do this and not break the bank in the process. What good does it do to teach people how to do this if it takes them forever to make back the money that they spend on the program? I'm going to show you some ways to make this incredibly easy. Now, like I said, my intentions are clear. All my cards are on the table. You don't have to question what this is about. And I hope you'll stay till the end, because there's some exciting stuff. I'm going to teach you the idea and give you some examples of how to trade with little or zero risk in the market. And that is absolutely critical to survive today's markets. You've got to figure out a way to be hedged and protected and not constantly have the fear of taking big losses in your portfolio. I'm going to teach you how to pick the right trades and the right trends and the right directions 75% or more of the time. And even more important than that, I am going to teach you what to do in this 25% of the times when you're wrong, because this is what breaks people's portfolio. I've had people tell me that they get it right 90% of the time. They actually pick the right direction and put on what they think is the right trade almost 90% of the time. And it's that 10% that they're missing on. This is wiping out all the profits from these and then some. I'm not sure how to get it right 90% of the time. The markets are too volatile. I'm not questioning it. I'm not saying people are being dishonest with me. I'm not sure how they're doing that. I'll show you how to consistently do this, and more importantly, show you what to do here so that the 25% of the time you're wrong doesn't wipe out all the profits of when you're right. That's such a critical thing in today's markets. And then the last thing I'm going to do in this presentation is teach you a little bit about the difference between learning how to fish and simply being fed fish. Now, I know you all know the cliche, but I'm going to tell you in what we are doing at Safe Option Strategies why this is so critical, why this is so important. It's a little bit of a philosophical conversation. I'll only spend a couple minutes on it at the very end of the presentation. Let's jump right in. This is a screenshot of last year's stock market, January 1 to December 31. And whether you are actively involved in the market, whether you got involved sometime during the year, you know that this was a shaky, volatile market. First time in a while that we actually ended the year to the downside. We had a wonderful run in January. Felt like it was going to be an extension of 2017. And then we had that ugly, scary sell-off in February. Things stayed shaky through March and April. Finally started to climb a little bit in May and June, a little bit of a blip there. Boy, and then we had a run. And this run right here, as nice as that was for people that were able to time the bottom and the top of that, and not everybody is able to time the bottom and the top of that, but as nice as that was, this lulled people to sleep. This really, truly made people feel like this was a fluke. It was over. We were back up to all-time highs. Everything was good. We can go all in. Life is wonderful. And then we had the worst fourth quarter that the stock markets have had, the US markets, the worst fourth quarter since the Great Depression, and the worst December in the history of the US stock markets. And my question up here at the top is, how do you protect against this? I didn't see this coming. I didn't know that we were going to have the worst December on record.
since the Great Depression. I didn't know we were going to have the worst fourth quarter. I didn't know we were going to have the worst December ever. And neither did anyone else. And if I can't teach you anything in this presentation, I want you to listen very closely to this. No one, myself included, no one knows how to predict what's going to happen tomorrow. No one knows how to predict what's going to happen next week, next month, next quarter, next year, next decade. It is impossible. Everyone who makes a prediction is either throwing out a guess or they're taking the best information they have available and they are trying to extrapolate from that information what is more likely to happen. That's all you can do in the markets. You can gather information that's taken place and you can make an educated guess on what's going to happen. But that's all it is at the end of the day, is a guess. So you've got to know what to do when you're wrong, how to protect and not lose money when this happens. I don't do this every time I do this presentation, but I want you to play a game with me for just a second. I want you to imagine something. Okay. What if there's nothing that I could show you, nothing that my education could teach you that would improve the percentage of the trades you get right? What if nothing I could ever show you would improve the percentage return on the trades you get right? But what if I could teach you how to never lose money when this happens? And in some cases, make a little bit of profit when this happens. And imagine this kind of a scenario. You make money from here to here. When everyone else loses from here, you stay right here. So this next move up, if I can duplicate approximately that distance, that next move up puts you this far ahead. And then when everyone else loses from here to here, you stop right there. And this next move up, you take advantage of. And when everyone else loses from here to here, you stay right there. And let's move on to the next screen real quick. The next move up, which is this nice little rally we've had since Christmas Eve, you're improving that even farther. So you get the advantage of the moves up, but you don't suffer the losses of the move down. Imagine that. Imagine what your portfolio looks like today if you never gain any more profit on the trades you're correct on, you never improve the percentage of trades you're correct on, but you don't lose money anymore. There's a way to do it. I'm not exaggerating. There is a way to do it. And what if on these moves up, what if in the worst case scenario, you had to give up about 30% of this move up, but you didn't suffer any of this move down? Because there can be a little cost to how to protect this, but when that cost is zero loss right here, it's a fantastic thing. Let me give you some examples of what I mean. I'm going to skip past this part really quickly. Okay. Zero risk trade. How do you create a zero risk trade that can still profit you? Something that you can still make money on. At the beginning of this past week, and I left this example in here, I left two examples in here that I gave on Monday because I wanted to illustrate something. I showed people how they could set up a trade on GoPro. Everyone heard of the little cameras, GoPro? You see their commercials. Nice, inexpensive stock. Listen, for those of you that are option-only traders, don't be put off by the fact that I'm going to show you a couple of examples of how to trade with zero risk using stock, because I'm also going to show you how to get some incredible returns and how to mitigate your risk dramatically if all you want to do is use options. But I will tell you this, my program is designed, Safe Option Strategies is designed to teach both how to trade with zero risk using stocks and options together, how to trade with a lot less risk and a lot better results using options only. I'm telling you, you ought to learn how to do both. But if you really have a preference to learn options only, or if you don't mind using stock, I wanted to show an example with a good inexpensive stock so that people didn't feel like it was too expensive to own stock. Let me show you what we set up on GoPro. We did this just this past week. And the reason we did it is because GoPro was reporting their corporate earnings, their quarterly earnings. They were reporting on Thursday of this past week. So we set up a trade on Monday. Maybe it was Wednesday. It was Wednesday or Thursday that they were reporting. $5.13 a share for the stock. Easy to own, 200, 300, 400 shares. You can own 100 shares of the stock for only $500. You can own 200 shares for only $1,000. For those people who think they can't afford stock, I know you're putting more than that into option trades. So I purposely chose a good inexpensive stock. We could buy the stock at 513, buy long put options at a 550 strike price for 67 cents. Now, for that hand that I know from statistic, I know from surveys we do, I know from all the web analytics and so forth, maybe 10%, 15% of the people who view my presentation, my free presentation like this, they've never been exposed to options before. I'm maybe doing this in reverse order, but follow me on the math on this really quick, and then I'll kind of give you a short lesson on how these options work in conjunction with the stock. Long put option at a 550 strike, 67 cents per share. Then we're going to sell a short call and get 33 cents per share for a $6 strike price. Now, what I've just put together is a collar trade. It's not a traditional collar trade the way you might look up on Investopedia. It's not a traditional collar trade the way some other people would teach it. This is a Safe Option Strategies collar trade. And what this collar trade does is it gives you a zero risk scenario to the downside. When GoPro reported their earnings, if that stock would have absolutely tanked and fallen down, we had the right to sell at 550, and we only spent 547 total for the stock, the long put, and the credit we got on the short call. We only spent 557 total to get into this trade. From now until we get through and beyond the earnings report by about a week and a half, we have zero risk. And if the stock were to skyrocket to the upside, just absolutely skyrocket to the upside to where we were in jeopardy of getting called out at $6 a share, we could still make 10% profit. The difference between the total cost of being in the trade and the price that someone would buy our stock away from us if we were to be called out. 10% profit, zero risk. This is one example of what we teach people to do at Safe Option Strategies. Let me give you another example. Snapchat. Anyone heard of Snapchat? One of these social media platforms. My kids could tell you all about Snapchat. They send me these weird little things on Snapchat once in a while where they've got a picture of themselves with some goofy face on it or goofy voice. And I have followed the stock since it went public. And I'm telling you, in there with Facebook and Twitter and Instagram and all these different social media platforms, one of the bigger companies is going to buy this one up soon. I'm telling you, it's going to happen. And a lot of people had an expectation when Snap reported on Thursday that they were going to tank. But we could have bought shares of Snap at $6.81 a share, a long put option to protect us through earnings at a $7 strike price. That gives us the right to sell at $7. And a short call that we could have picked up 34 cents a share on that would give someone the ability to buy our stock away from us at $8 a share. In this case, we actually had 13 cents of risk. I hope that doesn't, we can put together a lot of trades like this that have zero risk. This particular one had 13 cents of risk in it. I'm okay with that, generally speaking. I love to find the perfect scenario where I can get zero risk, but I didn't feel like 13 cents a share of risk was a bad thing. And if the stock skyrocketed up, so if we would have dropped and had a big, huge sell-off on the stock after earnings, the worst thing that could have happened to our trade is a 13 cent per share loss. If the stock took off to the upside and we got called away at $8 a share, we had the potential to make a 12% profit. Now, let me show you what happened. This is why I left this in, even though I did this example earlier in the week, and I could have put a brand new fresh one in when I did this presentation live today. I left this one in because I want to show you what has happened since then. Anyone who watched this presentation on Monday, this is what would have happened to them if they would have actually done this trade. I didn't recommend anyone that they do the trade, but if they would have done this trade, here's what happened. As of Friday's close, Snapchat had this gap up. They came in and they beat the analyst estimates. They beat on revenue. They beat on profit margin. They gave good guidance for next quarter. This company outperformed what everyone thought it would do. They gapped up from 681 to 910. Now that only, that's only a couple dollars, $2.29, I believe. Do you know what $2.29 a share is on a 681 investment? If you just looked at the stock, 229 divided by 681. Whoops, hang on. 229, 681. They were up 33% in a couple of days since their earnings. Now, a lot of people say, well, why would you just buy the stock and take a chance on it going up that high? Well, because they could have been down 34 or 35 cents a share. 910, 229 profit. At the same time, obviously, the short call has gone up in value. And if I spent money to close something that I took money in on a few days ago, that would represent a loss. And those long puts that we paid 66 cents a share for are only worth a couple of pennies as of Friday's close. And that's a 64 cent per share loss. But folks, on a 4-day trade, you could cash in that profit, close those for a loss, and still have a 6% return in 4 days. Now, let me put that in perspective. 6% in 4 days. Last year, the US stock market, the Dow Jones Industrial Average lost 6%. The NASDAQ lost 2 or 3, and the S&P lost, I think, 7. That's what happened for 2018. Do you realize you could have got it back on one single 4-day trade that had minimal risk? This risk represented barely, what is it? 0.13 divided by 7.13. This represents less than 2% maximum loss. That's the worst thing that could have happened. And in 4 days, we got 6%. If we just sat on this now and waited until someone called us out at $8 a share, do you realize we could still make that 12%? We could possibly have to sit in the stock for a couple more months. We could still make that 12%. This is what we teach you at Safe Option Strategies, how to find the right company, how to find the right numbers, the right timing, the right circumstances, so that you can put on a trade like this. Last quarter of last year, when the markets were tanking, right at the beginning of October, we set up a similar trade on Advanced Micro Devices. I want to show you this one because of how it worked to the downside. Stock was trading at 27.59. We got some 28 strike long puts. We went out and paid for them with some short calls at a 30 strike price. We had a net price of 27.74 and we had zero risk. Now this was on October 4th of last year that we set up this trade. This is one I sent to all my students. I didn't just use it in this class, this free class. All of my students that were a member of my program were sent the details of this trade. And here's what happened. And this was a couple of days after AMD reported their earnings. The stock was down $9.87 from where we had first got in. The long puts were up $7.55 from the price that we bought them. They were worth $10.75, but that was an actual profit of $7.55. The short calls had lost so much of their value that they were showing a profit of $2.95. And after being in this trade for a little less than a month, we were up 63 cents a share on a stock that was down 36% from the time we got in. Now, 63 cents divided by our initial investment of $27.74 meant that we were up a little bit shy. We were up about almost 2.5%. Now, a lot of people would look at that 2.5% and say, that's just not that much money. Folks, we didn't lose any money. The stock tanked and we didn't lose anything. That's the power of what we're doing. Now, I want to take this a few steps farther. I'm going to kind of skip past this in the interest of time. This is just the same. All I'm doing is showing you right here the exact same trade, kind of what it looked like on a stock chart, where the stock went down 987, the long puts went up 1050, and the short call went down to being worth almost nothing. Okay. I skip past that because I don't want to go long on this presentation. And I want to show you this. When you combine setting up a trade with zero risk, using the long put options for that protection, and then you combine it with a process of cost averaging. I'm going to go through this lightning fast because I know most of you intuitively know what this is. Cost averaging is when you buy a stock at $100 a share or $50 a share or $25 a share. You buy a stock, the value of the stock drops, and you buy more shares at a lower price. You have averaged your overall cost to the downside. Your first share is at 100, your second share is at 50. That means you have 2 shares. You have $150 investment. That's $75 a share. You've averaged your cost down. When you start averaging down with long puts, something phenomenal happens. It is incredible the difference that this makes. You go out and buy a stock and you also buy that long put option. And let's say your stock drops 50% in value. And I'm exaggerating to make the numbers simple to understand. Your stock doesn't have to drop 50% for this to happen. Stock drops 50%. You go ahead now and sell that long put option. And that's the money you use to buy the next share of stock. And what happens now is that your cost average, if you bought that one share at 100 and the next share at 50, your total is 150 out of pocket. So your average, and you've got 2 shares now, share number 1, share number 2. So you're dividing that by 2 and your average share is 75. But when you buy your first share for 100 and then you bring in $50 on this long put and spend that $50 on the next share of stock, you've picked up that second share for 0. So now your investment is still $100. You divide that by 2 shares and you've got $50 a share as your average price per share of the stock. And when you combine these 2 things, I want to show you what happens. Let's say we started this with 200 shares, just as an example, because that's an investment that most people can afford if they've got money in the stock market. You add 100 more shares at 0 cost, which is exactly what we could have done right here. On this AMD trade, this is what we did. We bought a couple hundred shares. Because of the profit of those long puts, we were able to add our next shares for 0. Our average price per share was now $18.49 on 300 shares. As of the close of the market yesterday, this was back in October. As of the close of the market yesterday, AMD was trading at, I'm guessing a little bit on this because I forgot to look at it right before I did this presentation, a little over $23 a share. I think they're $23.30, $23.40, but a little over $23 a share. Now, $23 times 300 shares is $6,900. This $5,548 investment, that hasn't changed. We have not increased this investment. That means that right now we're sitting on $13.52 profit. And if you divide $13.52 by our original investment of $55.48, we are up 24% on a stock that is right now trading more than 10% below where we first bought in. Think about that. The stock is down more than 10%. We are up 24% in this position right now. And this is a little bit better than last year's loss of 6%. This is what we teach you how to do. I feel like I'm going to go long on this presentation, so I'm going to kind of jump through this really quickly using what I have just shown you. Just using the concept that I have shown you, buying long puts, protecting your investment, protecting your principal, using the profit from those long puts to buy shares when the timing is right. And we teach you when that timing is right. We teach you how to time all of this. We help you time all of this. I had a student that did this with JCPenney. He bought 300 shares in August of 2013. And every time it was going down, he had long puts in place. Now, he didn't time. This is important. You need to know this. He did not time every single top and every single bottom to perfection because we don't have that crystal ball. No one has that crystal ball. A lot of times he was timing it on technical indicators. I'm going to talk about that in a minute. A lot of times he was adding long puts just before an earnings report, and it was this earnings report that was causing the stock to shoot down or to skyrocket up. He was buying stock when he got technical crossovers that we were moving back into a bullish trend. And just using that concept that I showed you, he kept doing this over and over and over again, over and over and over again. He continued to do this over and over for 3 years and 4 months. He just continued to add more shares when the money from the long puts would pay for those shares. He never increased this investment. And this is the number I want you to key in on right here. That's not an exaggeration. 475% in a little less than 3.5 years. He shared this with me right about here. When he was about 2 years into the trade, that's when he called and was just giddy with excitement saying, Jeffrey, can I show you what I've done? I said, of course. And he shared this with me. And this is what he learned from our program. Folks, we can teach you how to do this. This is not the only example of students that have done this. We put on a trade with our students. This is one that we shared with our students. Again, I'm going to go through this really fast. Whoops, a little too fast, sorry. We helped our students put on a trade about 4 years ago, well, 3.5 years ago. We stayed in the trade for about 3.5 years. And on a stock that was down over 50%, we were up 200%. Any one of our students who had followed us in this trade had the ability to have that same. We're in it about 3.5 years right now. This represents 3 years of being in the trade. We've been in for about 3.5 years now. Sorry, I'm confusing you because I'm trying to go too fast. Folks, this is what we teach you to do. I could show you example after example after example. You remember I showed you the example of AMD just a couple minutes ago. I showed you AMD and we're up 24% in about 4 months. We did a trade right around that same time on Under Armour, but we did one little thing different. We did twice the number of long put options as what we needed to. For every 100 shares of stock that we bought, we got 1 covered call and 2 long puts. And we had 0 risk in the trade and a nice profit if we were getting called out. And at the end, actually, this was at the very first part of November when they had reported their earnings. The stock had moved down, not ridiculously from where we were at, but because we had twice as many long puts, the stock had moved down. And we were up $1.50 on a stock that was down about 8%. $1.50 divided by our $19.42 starting price, we were up almost 8% on a stock that was down 8%. I'm showing you this Under Armour trade because these don't have to be long-term trades. You don't have to be in it for 3 years. You don't have to be in it for 4 years. We teach you variations that you can set it up so that you can get out. This trade was open for barely a month. Barely a month. And what if you had made that much every month last year, having had 0 risk in the trade? That's what we are teaching people to do, folks. That's what we're teaching you to do. Now, let's talk about getting it right 75% of the time. A year ago or so, maybe a little less than that, I was getting ready to do one of these presentations for my students, and it was a group of new students, and I was teaching them some beginning fundamental and technical analysis. And as I was setting things up, I took this screenshot because all I wanted to do was switch one of my indicators to an exponential moving average. That's all I was going to do. But then I started looking, and it was just a good reminder to me. I could have chose Ichimoku clouds or Ichimoku clouds full. I could have chosen Keltner channels, parabolic SAR, chandelier exits, pivot points, price channels, price same scale. It didn't stop there. I could have chosen Arun oscillators or just simply Arun. I could have chosen correlation, Chaikin money flow, dividends, ease of movements, Kopach curve, Chaikin oscillators. And this is just the tip of the iceberg. There are hundreds of technical indicators that you can use. People use Fibonacci retracements. People use Bollinger Bands. There's all this different stuff that people can use. And for most people that start studying this and getting into this, it becomes more of a distraction than it is a help. If you will, remember this, don't ever forget this. If you never do anything with my education, please don't ever forget this. If you will focus on the RSI, the MACD, and the 5 and 20-day exponential moving averages, historically, it has been proven that 75+% of the time, when these three things give you a technical crossover up or down, relatively close to the same time. These are not always going to come on the exact same date, but relatively close to the same time, you are going to get a continued trend in that direction. A trend being defined as more than 2 weeks or more than 2% in that direction. Think about that. 75% of the time, you no longer, now I still look at levels of support and resistance. I occasionally take a look at Bollinger Bands. I teach my students how to look at sometimes if a level of support matches with a 50-day moving average or a 200-day moving average. I'm not saying you ignore that stuff completely, but if you want to be right on what direction a company or an index is going to go, if you want to be right 75% of the time, remember this principle. Does anyone, I don't want to say it because this is the word stupid and I don't want to imply that about anyone. Does anyone not know what this means? Keep it simple. And then you can use it with or without that. This is if you're trying to really drive that point home. Keep it simple. Don't get bogged down and get weighed down in the junk and the clutter and the distractions. Look at the RSI, the relative strength index, the MACD, which stands for moving average convergence divergence, the 5 and the 20-day exponential moving averages. 75% of the time, you'll be right. Now, that's easy. That's super simple. What do you do in that 25% of the time that you don't get it right? It just dawned on me that I forgot the word "it" right there. Fix the 25% that you don't get right. Oh no, that makes sense. I didn't need that there. Okay. That's the danger of doing this live. When I do these presentations live, you have to hear my mistakes. Okay. How are we going to fix that 25%? Number one, we're going to teach you a better way to plan your trades. Now, this applies more, it applies to the collar trading and the trading with stocks included. This applies more directly to the spread trades, to the option only trades. Plan your trade. This step largely gets missed by people. They see a good trade or someone tells them about a good trade and they get in, but they have no plan on when or how to get out. They know they want to make money. Let's make money, but beyond that, they have no plan on how. And then whatever you plan as that exit, I'm going to get out with 20%. I'm going to get out with 50%. If I get up to 30%, I'm going to put a trailing stop loss to get out with at least that much money, but let it go as far as it'll go past that. This is what most people don't do, is plan the backup. Now, at Safe Option Strategies, we refer to that backup as an adjustment strategy. If you don't know how to adjust trades, you're in trouble. This market is unforgiving if you don't know how to adjust trades. Let me give you a quick example of what it means and why it's important to adjust trades. Let's say, and this is an option-only trade, and you know that option-only trades can sometimes have a really nice return in a short period of time, and then we take that profit and we add that profit back into what we started with, and our next trade is starting with the combination of both. We just reinvested. That's a good thing. And then we make a nice little return on a short-term trade, and we do it again. And remember, I said anybody can be right 75% of the time. This is what happens to most people. They're making that fourth trade. They've reinvested all their profits from before, and in the blink of an eye, when that stock moves against them, they're down 50, 60, 70%. You have not traded options for any length of time and not experienced this somewhere along the way. If you've been trading options for any period of time, you've had this happen to you, and it sucks. It hurts. It stings. Whatever word, insert your own bad adjective right there. It's a bummer when that happens, because it can take a nice batch of profit and principal and turn it into a quick loss. And just in the blink of an eye, you're down in that trade. You're down dramatically in that trade. And that's not a fun place to be. One of the main things we focus on at Safe Option Strategies for options only trader is every spread trade, every type of option strategy you can think of. We teach you how to adjust it for a move that you don't want. It might be that you've got on a bearish trade, but it's not going bearish fast enough. It might be that you've got a bearish trade that reverses and goes bullish on you. And we teach you in detail how and when to create the timing, and you pre-plan this, and then you follow it through. And it doesn't guarantee you profit, but if you do it right, this is the result. You do the same 4 trades, you reinvest the profit, you keep building it up, but now, because you adjusted, and you adjusted because you set it up correctly, you're taking a 0 loss instead of a 30, 40, 50, 60% loss. And look at the difference in the same 4 trades over the same period of time. One was down 34%, the other's down, or excuse me, the other is up 52%. 86% difference in these 2 scenarios. 86% difference, because you knew how to adjust the trade. Now, this presentation does not give me time to detail how we adjust trades. But let me talk to you about the importance of learning how to do it, and then let me show you what we have done as the proof in the pudding, so to speak. Let me show you what we have done with our ability to adjust trades. Okay, every one of you, I would be surprised if any of you on with me live, anyone listening to this recording later, I'm going to be really surprised if you've never heard this. Feed a man a fish and you feed him for a day. Teach a man a fish and you feed him for life. Okay, I heard this growing up. I heard it in high school. I heard it in college. I heard it from my parents and my grandparents. I've heard it from bosses. I've heard it from people I work. Everyone's heard this. And it's true, isn't it? I mean, it's true. You can do something. The premise of this entire thing is you can do something for a person over and over and over again, but if you never teach them how to do it, you're handicapping them in a way. I could pay for everything that my kids do, but if at some point in time I don't make them pay for it themselves, they're never going to learn how to pay for it. And what if I'm gone one day or the money runs out and I can no longer pay for their stuff? I've taught them nothing if I just continually pay for everything that they do. But there's a problem. There is a flaw in this nice little saying that we have fun with. There's a major flaw in it. I've got 2 very close friends. One's a brother-in-law who I consider a great friend, and the other is one of my best friends for the last 15, 20 years that we've known each other. We work closely together. We do a lot of stuff with our families together. They are both fishermen. They love to fish. There's nothing they would love to do more in their spare time than fish. And I don't fish. In fact, I suck at it. I can go out fishing with them, and I listen intently to what they're telling me. And they say, you're going to cast the line right here. And they show me how to use the right kind of bait. And then they show me how far to put the weights away from the little bobbin thing that holds the line up in the water. And you say, you want it this far away. And then you say the hook will float up this much under the water. And they teach me, and I pay attention. I really pay attention. And then they throw out to a spot, and they even go so far as to teach me, I'm throwing it to this spot because there's a little current in the water, and you can see how it's kind of bubbling around these rocks, and that the fish are kind of drawn into this spot. And I watch them, and they cast it out there, and that line is out there for a couple of minutes, and I see the little bob go under the water a couple of times, and I'm thinking, you got a fish. And they're like, patience, just wait. And then it goes under, and I see them pull the line, and they pull in a fish, and I'm thinking, all right, I got this. I can do this. And I set my hook up the same way, and I set my line up the same way, and I cast it out in the same place. And I see that bobbin going down under the water, and I pull my line, and I bring it in, and I've got seaweed or something, some vegetation that grows on the bottom of the lake or the river is on my hook, and the bait is gone, and I look at them and I'm like, what did I do wrong? And they're patient with me. They teach me. They say, well, it's going to take a little bit of time because you feel things in the tension of that line that tell you whether or not the fish is just nibbling or whether it's really got that hook in its mouth. And as soon as that hook's in the fish's mouth, before it sinks into their cheek, they have the ability to get that food off of it and spit it back out. So there's a time, the perfect time in there when it's far enough in their mouth that a good yank of it is going to set it in their cheek. But if you pull it too soon, you're going to pull it away from them. And if you wait too long, they're going to spit it out. I'm like, okay, that's good to know. Now, if you don't care at all about fishing, I've just bored you to tears for 2 minutes explaining that. But here's why I explain it. Here's why I take the time to explain that. I absolutely believe that if you feed a man a fish, you feed him for a day. And if you teach a man to fish, you feed him for life. But if you're not going to feed him while he is learning how to fish, there's a chance he could starve. If I got lost in the wilderness with my brother-in-law or with my close friend, if I got lost in the wilderness with either one of them, and I had to rely on my fishing ability to feed myself, I would starve. If they would help keep me fed until I could do it myself, I would be fine. This is what most people leave out of the equation. What happens if the man starves while he's learning how to fish? One of the things that we've done that's very unique at Safe Option Strategies is we've created an advisory service that goes with the education. People cannot buy the Safe Option Strategies advisory service by itself. I know, again, this comes through polling and through feedback we get from our students and surveys that we send out. I know for a fact many of you listening to this presentation have spent money on an advisory service. Pay us $2,000 a year or pay us $200 a month or $5,000, whatever it is, and we're going to show you every trade Joe did that made him a millionaire overnight, and you're going to be able to copycat everything he did, and it's so simple. You just pay the money and you'll get rich by the end of next year. And you're frustrated because you spent that money, and guess what? When push came to shove, you weren't learning how to do anything. And Joe, who was a millionaire overnight by doing this, he didn't get as lucky this year as he did the year before when he decided to start offering up an advisory service. When Joe got in with some high risk, high reward long calls at the end of third quarter of 2009, and he just let it ride for the next year because they were leap calls, and he took $100 and turned it into $10,000, guess what? Joe got lucky, and now Joe believes he can help you get lucky too. Problem is, if the same circumstances don't repeat, you and Joe find out the hard way that he just got lucky and you just got screwed out of $5,000 for that year's worth of service. I do not sell my advisory service as a standalone product. My advisory service at Safe Option Strategy is used to keep you fed while you are learning how to fish. We give our students a new trade, at least one new trade every single solitary week. This is the option only trades I'm talking about. The collar trades we do a little bit different. I'll explain that in a second. We give them a trade every single week. We make it very easy to understand. We give simple analysis and explanation on it, easy to follow instructions. We help you set it up, make it very easy to set up with step-by-step instructions for the entry and the exit. We define the limits so that you don't get burned if the market jumps at the open of the next day. One thing I got to tell you about these trades that go out, do you know we don't do this during the day when the market is open? Everything that we send our students is after the market has closed so that you have the ability to set it up for the same time we do the next morning at the open of the market. So if you live in Mumbai, India, and I mentioned that because I have a couple of students in Mumbai, India. If you live in Johannesburg, South Africa, if you live in Auckland, New Zealand, if you live in Sydney or Perth, Australia, if you live in Tokyo, Japan, it doesn't matter. You can get into the trade the same time we get into the trade. You don't have to be setting alerts on your phone to chime in the middle of the night wherever you're at in case we send an alert during the middle of the day. You can place these trades and follow them through at the same time we do. It would be unfair if we didn't do it that way. Do you know how many advisory services send out alerts during the day and then they tell people, well, if only you would have done this right at the same time we did it, you would have got the same results. But yeah, you know, you did. Not my fault that you didn't see the alert until 3 hours later when you had your lunch break. And by that time, the stock had fallen back 10% off of where it was trading at the early part of the day. We don't do that to people. That's a side note, but I want to make sure you understand the way we do this. This is the most important part. These trades, we don't just give you a pick and then leave you on your own. We help you do it. We're there with you every step of the way. If an adjustment is needed, we send you out the details of that adjustment. These trades that we send our students every week, I want you to look for the past 6 years at what the Dow, the NASDAQ, and the S&P have done and what our trades have done by comparison. And this might be the most important one of all. Last year was amazing, by the way. Absolutely amazing. I've never had a year where I made almost 100% on my trades. I am more proud of this than I am of this because look what the indexes did. Last year, the Dow ended down 6%, NASDAQ down 4%, S&P down 7%, and we were up almost 35%. We are keeping you fed while we are teaching you how to fish. Let me show you really quickly how we teach you how to fish. For those people interested in that collar trade that I showed you, we have an entire program set up just to learn that collar trade in detail, including 12 collar trades that we follow and tell you when the right time is to get into or get out of them. So that's kind of your trade advisory for the collar trades. You can get this in a yearly or a lifetime membership. The lifetime membership is only a little bit more than a yearly membership. And it's incredibly affordable compared to other things that are out there. If you don't want to own stock, if you don't want to have collar trades and have stock ownership as a part of your portfolio, and you want to do option trades only, we have an entire program for that with a yearly or a lifetime membership. And then if you combine the two programs into the complete education, also with a yearly or a lifetime membership, there's an even deeper discount. Now, I'm not going to turn this into a sales pitch, and here's why. I don't hire salespeople at Safe Option Strategies. I was very honest about my intentions at the beginning of this presentation. I told you at the beginning that I hoped that I showed you enough to make you want to take a closer look at what we're doing. The way you can take a closer look at what we're doing is to email or call us, and I'll give you all the details you need on pricing. And anyone who calls or emails within an hour after the completion of this presentation, I'll offer you a really, really deep discount on the program. But let me say this one last thing, and then I'll show you how to get in touch with us. And I'll tell you a little bit about the discount. I won't even leave you hanging on that. I'll tell you a little bit about the discount. I really do believe, I know, I don't know how I can be sincere enough to really relay to you how sincere I want to be. I know how hard it is to spend money on education when you've already spent. I know how hard it is to trust someone that you're hearing on your computer and you're seeing this presentation and you get a little bit excited, and then you think about times when maybe you've been burned. I know that's tough because I went through that back in the late 90s, the early 2000s. I went through that myself. I did it. I get it. I understand. All I can tell you is that I am so confident in what we're doing here at Safe Option Strategies that I believe if you'll take a look at this and if you decide to get in, you'll never want to buy investment education again in your life. You'll never need to. And I'm so confident in what we're doing that I offer a better money back guarantee than I believe anybody in the industry. I back up what I do. I stand behind what I do. I never use any criteria to measure the success of my company beyond the individual success of my students. One of my early students is now a registered investment advisor using these principles, using this education to very successfully trade money for his clientele. And he is directly affiliated with Safe Option Strategies and will help my students with their portfolios. I don't throw out that BS line about we can't give you personal advice on your portfolio because we get in trouble doing that. No, we can, because we've got a registered investment advisor on staff with us that can help you do that. Folks, I know it's a big thing to ask you to trust me. So before I ask you to trust me, let me ask you to ask some questions. When this presentation is over, and I'm done in about a minute, email me at info@safeoptionstrategies.com. It's just the name of the company.com. No spaces in between. Okay. If you'd rather call, but I'll tell you this, if it's on the weekends, if it's in the evenings, if it's right after we do one of these presentations live, our phones light up a little bit, just make sure you leave a voice message. We're a small company. I don't have a huge staff. That's how I'm able to keep the price of this education down. And let me tell you one thing about the price of the education. I'm going to blow you away with how affordable it is. I really am. I offer more content at a lower price than any competitor that I believe is anywhere close to me. And I don't think anyone is even close to me in terms of the content that they offer. And they can't touch our pricing. It is more affordable for what you get than anything you're going to look at. But here's what you're going to do now. And I want to make this clear. There is no obligation on your part to purchase anything. Zero obligation to make a purchase. If you will email or if you will call and leave a message and just say, what is the best price you can give me right now? Or what is the discount that you're offering right now? I made a decision a few days ago. We've got President's Day coming up here in the US. The markets are going to be closed next week, Monday. I'm going to be on a ski trip with my family Friday, Saturday, Sunday, and Monday. I'll have some people watching the computers and watching emails on Friday and Saturday. From now until Saturday night. In fact, if you contact, I'll go one step farther. I'm going to make a decision on the fly here. If you'll contact us no later than the close of the day, Monday, President's Day, because some of you may not have a chance to watch this presentation until the weekend. If you will get a hold of us no later than President's Day, I have extended my 2018 pricing through the month of January, and just a couple of days ago, I decided I'm going to go through President's Day on our 2018 pricing. And folks, we offered a pretty amazing discount at the end of 2018. After President's Day, we're adding a whole new program into the education. Our price is going to go up, but here's the other bonus. Anyone who purchases the program before the end of the day on President's Day, the additional program that we're adding into the collar trade and the spread trade program is going to be included free of charge. My students never have to pay another dime when we add content. So here's what you're going to do. You're going to email us or you're going to call. There's no obligation to make a purchase. You're just going to say, Jeffrey, what's the discount you're offering right now? Or something about your presentation stood out to me. What's the best pricing you can do? I'm going to email you a PDF document that has the retail pricing and the really, really deep discount prices. And even after you've seen those deep discount prices and said, wow, that's a really good discount. That's a pretty amazing price. I'm still leaving the door open for you to ask any questions you want to ask. Email, call, ask any questions you want. I don't want anyone joining this program if I cannot thoroughly and completely and fairly and honestly answer their questions. I back this up with a 100% satisfaction guarantee. If what we're teaching you is not making you money, if you're not satisfied with the content or the delivery, you get your money back. One of the things I am most proud of is I can count on one hand in 14 years. I can count on one hand the number of times I've given people their money back. And in all fairness to them, bad timing. They made the purchase and then they realized it wasn't the right time for them to do it. They made the purchase, they got in trouble with a spouse. I don't want that to happen. I don't want anyone doing that. They made the purchase, something changed in their life dramatically. I had a gentleman who bought the program, and I'm not making this up, the next day his sweetheart of 70 years, 70, he was 90 when he bought the program, by the way. I was a little bit surprised, but smart guy, sharp guy. In fact, he came back to me a couple years later, bought the program again, and at the age of 98, I believe he's still trading. Haven't heard from him for a little while. His sweetheart of 70 years passed away day after he bought the program. He said, I just can't do it right now. Folks, I'm not a jerk. I'm not an unreasonable person. I want this to work for you. I want you to succeed. I want you to profit. I have a way that will do it under any market conditions. No matter what this market throws at you, we're going to help you make money. Take a minute to call, take a minute to email. I'll send you all the details of the pricing. And even then, you get your questions answered. And if this is a good fit, I cannot wait to work with you. If it's not a good fit, I hope you find what you're looking for. And I wish you nothing but the best. Thank you for tuning into this presentation. Have a great day. Bye-bye.